Okay, quick Friday morning radar update. So, 4 on the floor this morning. We've got the a gap up in the FTSE 100, in the DAX. A pretty weak gap fill attempt on the DAX there. Looks strong so far, and we've got risk on in the 250 in the small caps. Obviously, this is the area if you trade growth stocks. This is going to be more important as an indicator of what's going on. So I would expect to see a lot of interest in, the small caps should be on volume. Let's just quickly have a look in the commodities. Copper's on gapping up again. Metals are on volume. I suppose we could have a quick look at that gold again. We've not seen the gold stocks hitting the charts yet, the screens yet, sorry. But, this was our sort of area of interest, the voodoo average, and it traded a swing kicker on this day here, and it still drifted back in, but it held. This is correction bull for a primary trend. It's coiling back in. The short-term trend is coming in to the longer-term trend. I think the best view of the gold market was GDX. This is the chart posted on that. So you've got the big breakout of the base, and then you've got the channel into that sort of correction bull phase, and now the squeeze is on. Does it mean gold's on? The way I approach gold is I like to see all the stocks go through the screens. Sometimes I'll nibble at the odd one, but it's usually after that initial sort of punch higher that they consolidate and throw the good low risk setups in the swing zone, in the swing areas anyway, for the more efficient sort of leading gold stocks. So you have to look at them as a group and decide if they're on first. That's the best way to approach them in my sort of style. Dollar bull, expected to go lower again today. Obviously, it's on the other side of the seesaw from the commodities. Let's just go through the portfolio as well. What is moving here? Idea. So this has been, obviously, you can see the arrow where I bought it. I've added it to it on the way up. It's the right side of a base. Stocks have to consolidate moves, let the buy and sell pressures sort of equalize before they proceed to move higher. This is normal action, and then off it goes again, and then normal action. And this is extremely normal, back into mean trend after punching the middle of a base. Double top, I trade towards double tops consistently. There's a reason double tops are quite, rare, because, it's a continuation pattern more than a reversal pattern. Overwhelmingly, it's a continuation pattern more than a reversal pattern. So, to have a base, you've got to have a double top, is basically what I'm trying to say there. So, good volume day. We had it on the end of day screens here. I'm pretty sure this isn't our volume. There was some big blocks went in yesterday, and looks good. I'll just go over to SDI because it's helping the portfolio punch new highs again today. I think we've had 2 days in the last 2.5 weeks where we haven't made a new high. Fantastic market continues. Insane couple of days in my portfolio. Let me just, I'll just get rid of this. Break this down again. I got on board here actually. Some members of Trading Basis got on board over here and added here. So takes a double top. Takes a double top, doesn't it? It takes a double top. It takes a double top. Moving on. So, it's trending strongly. We're up way over 100%. What is it doing here? Well, it broke out this high in the sky base. So what do I mean by high in the sky? It's probably riding a short-term moving average, so it's not as meaningful. It's not what we call a stage base. A stage base is usually a longer, this is a shorter base in a higher area. It's not sort of visited mean trend. So stocks consolidate through time or price. This is going the time route. What does that tell us? It tells us that this is going the stronger route. It's holding up extremely well. Famous last words. Don't quote me on that. So this is extremely normal action, and it might do a little bit of this, but at some point, and it could take off without visiting mean trend. But as I said over here, as soon as you start reading about these stocks, this is where general sort of you sort of people who follow news sort of get on board. So they all start hearing about it over here. It's already up way over 100% for us by now, and it's done nothing since. It's kind of gone sideways. So don't take this as a bad sort of I'm not being negative to people who do business in this area, but this is where noise tends to hit the tape. You've got a perfect trend, and then all of a sudden, the people who chase news jump on board, and then just the amount of people who sort of chase news reports tends to cause volatility, and the market likes to, market's like a dog shaking fleas off before it, it just likes to shake these new new fleas on the dog. It likes to just shake them off before it proceeds, and it will put them through the spin cycle, and that's basically what this is doing. The quicker you sort of understand that this is just human sort of emotions, what cause all these ups and downs in the markets, the better your investing will be. So we're doing extremely normal action here. Time or price, it's going the time route. That's good. Nothing wrong with that. Fully loaded, locked and loaded. JLP ticked higher again today. There's more red than green in my portfolio today, but it's a weightings thing. Let's go and have a quick look. I'll spin through the large caps extremely quickly, and then we'll get into those small caps. The sun has just come out. I can hardly see the screens. It's 10 o'clock. We should have traded 23% to be on average volume, 35% to be on conviction. 23% large caps for a Friday as well. This is pretty good. So there's 37 in the large caps. Let's just buzz through these. This is return to growth, return to profit, tick up in the full year on that one. See, this is a lose less. It's kind of a recovery. We saw it coming out of this base, didn't we? And it threw a few swing points over here. Broke out, swing point again. Can do average. CVSG, high five, is still doing well. This is a return to profit, Drax. I tend to sort of avoid doing business in the return to space unless it's a really fantastic reward to risk area, because there's just so many better stocks out there at the moment. The old William O'Neill sort of saying, the leader is not, I don't know the exact quote, but basically the leader is not necessarily the one everyone knows about. It's the one with the best growth and the best trend. Totally blew that, didn't I? If I was to say leaders in the UK at the moment, Well, I think we're in a few of them. You know, WATR, SDI, and JLP are definitely leading trends in my space, along with a few others. HFD. Very rare view for us again, you know, stage 1, stage 2, stage 3. Maybe not stage base, but it's a pretty defined little level. You know, for a large cap. It's a small cap now, isn't it? Fully listed small cap. I always think of it as a 250 stock, but it's doing fine. Micro Focus could throw a swing point around here. You notice the voodoo average came into play. So you've got a messy base, and you could see that. This is another return to growth, return to profit prospects. So, you know, if those front forward numbers change, you know, this will gap down on you, you know. It's not like it's got good underpinning of profit or anything already. You want to build a case with a bit of guidance as well on those, I would say. I will now put 24% in the small caps. And we'll buzz through these pretty fast. Then I'm going to walk away from the screens. Obviously, we've covered this so many times. It's been basing for so long. A good chat in the end of day screenings last night talking about another stock. You know, they look horrible, and then they trade the switch. Go and read the ShareScope tutorial if you're interested in what I call the switch. And you know, this area here is the area decisions should be made, not today. This is where the reward to risk should be showing up in your portfolio, not where you should be executing. So this was the switch, and this is where all the setups you will find: breakout, swing point, pullback areas, little ledge, you know, breakout again. All the setups will be found in this little zone here, what all the professionals use. And I should, and it doesn't mean it would be a winner either, but let me just write that down. RBW, kind of right side of a base again. It's a little bit rear view for anyone who follows my style. TGR, IPO breakout. You know, all these stocks are starting to do well. WATR, you know, top right hand side. FCAT, you know, just exploded, didn't it? Audio boom, amazing. That base was the first time I've seen it, you know, look interesting since the first time I traded it all the way back here. And then that's where I was bearish on it, and that's where I got a lot of stick for being bearish on it. KDNC continues. It was what we call a POS or a CTP, but you know, it's doing okay. Calculated total punt, trademark Sean. JLP there. This is doing it, you know, I know I'm talking my own book, but what a lovely looking chart. I talked about these on the sort of videos I did, so you should be able to find those. EPGS continues. Fantastic. Bird is the word. Another CTP. So a healthy market. You know, how many months has this been marked? You know, I'm geared to capture when the market goes into melt mode. It's you know, hang on for dear life, trail that stop order behind me. You know, with no sort of discounting of the right hand edge, as in saying something's trading at value or whatever. You know, good stocks, good things happen to good stocks, and they appear in the right hand edge. And you know, if you sell into strength, you never get the chance to get back on board the best ones. It's as simple as that. So you know, I'd rather the laggards in my portfolio just drift off. I'll stop out for small losers, small gains, whatever, and capture those best stocks is basically what I'm trying to do, what I am doing repeatedly. Okay, I will leave it there.